Hi, this is Tony Sagami again. Hey, let me tell you a tale of two different countries again. Last week, the Commerce Department reported that same-store retail sales in the U.S. dropped by 0.4% in April. You know, that's not a significant drop, but it is a drop nonetheless. And it does come on the heels of a 1.3% drop in the previous month of March. So the Americans are still very tight with their money. Consumer spending is very slow, and things just aren't very healthy. I think a good example is one of the contrary examples of why things are tight is that Walmart sales actually did pretty good. They reported 5% same-store sales. Now let's go across the Pacific Ocean and take a look at what's happening in China and compare that. During the same time period in April, retail sales rose 14.3%. That is a staggering amount of spending activity, and it shows that the retail business is still very healthy in China. Could you imagine what the U.S. markets would be doing if we had that type of strong retail sales growth here in the U.S.? But that's how different it is in these two continents. I might add, by the way, that industrial output was up by 7.3% the same month. So things are doing very well over there. It's not quite the 20% plus breakneck growth we saw earlier, but China is still rapidly growing. What you need to remember is you want to invest in markets where there is still healthy economic growth, not contraction like we have over here. And when it comes to Asia, the two things you should be looking at are the companies that, one, focus on their own internal domestic consumption, and that would be companies like Nepstar, China's largest drugstore chain, or even the more luxury goods like Louis Vuitton and Coach. And the other thing that's still doing extremely well over there are the infrastructure stocks, companies that are benefiting from China's $586 billion stimulus plan are doing very well. The companies involved with the construction of roads, dams, highways, airports, shipping ports, the basic infrastructure, those are the companies that are also prospering. So take a look at what's happening in the U.S. and ask yourself, where should you be putting most of your equity dollars? In the U.S., where we're mired in a recession, which I think is going to get much, much worse, or over across the Pacific, where economies are still growing at a very healthy rate. This is Tony Sagami signing off. Until next week. Bye.